IMBI is actually in process of a very complex validation system here. So I want to be able to explain to you guys in this video what exactly that means. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an HLBZ technicals and statistical thread of analysis, excuse me. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community called ARCa in Discord. Okay, but with that said, let's go ahead and dive right into the charts. So we are looking at HLBZ on the daily chart here, and we have actually been riding a descending channel for quite some time now, and this descending channel usually is a bullish formation and presents the potential of a reversal of trend. So in this case, we are within two different formations. So we do have a falling wedge within a descending channel. Now, in order for us to break out of these channels, and formation, we do need to meet the golden rule of three, which is usually three tests of the resistance of both of them, and also the breakout on test number 4 after a capitulation event. Okay, so I also mentioned on I think maybe the first video. Excuse me. So, sorry, I've actually been talking for so long, so many videos. Okay, so I did mention that there is a possible confusion within this area here because we're actually starting the trend of the falling wedge from this candle here, which presented now a breakout of it for test number 1. And the next day, another test of it. So the potential of us having a second test with, between these two candles could have been a confusion here for some traders. Now, if today's price action actually led me to believe that they did not see test number 2 and in fact use this as test number 2 and this as test number 3, since we are currently failing the newly converted resistance into support from our falling wedge. Okay, now our descending channel did get the 4 tests. So the descending channel, this is the resistance of the descending channel, okay? So we are looking at test number 1 of the descending channel. Let's see here. We have test number 2 of the descending channel and test number 3 right over here. Now we have that accumulation event and test number 4. And in order for us to continue on to the upside, we need validation of both of the newly converted resistances into support. Okay, so both of these need to be confirmed. Now, since this price action is failing the newly converted wedge resistance into support, it has reclaimed it and has made this into a resistance once more. Why? Because we have 1, 2, 3 tests of the triangle, so there's the likelihood to where we can actually face a downside move to around 15 cents at the lowest. There is a range to follow though, so it could be between 17 cents to 15 cents for a massive reaccumulation here before an upside continuation and true breakout of number 4 from the descending wedge, and then we start confirming this before a continuation onto the upside. Okay, so now let's move on to the next chart. So now, this was now in a smaller time frame. Okay, so this is 4 hour. Now this falling wedge is not the same as this falling wedge because we're in a daily chart here. Okay, so the falling wedge that we're looking at is potentially like over here or something. So, so this smaller time frame, 4 hours, does have also the golden rule of 3 played out. Now, it's even hard to see because the line was so precise. This is where we closed. Okay, we closed at about 21 cents, right? 22 cents, 21.90. So this trend line is so on the price action that it's hard to even see. I'm gonna make it real visible. Okay, so see, so this trend line here is literally where we said we can use as a validation for support. For support, because this is also a triangle that was forming within this smaller time frame falling wedge. So the falling wedge has already broken out, but as you can see, no candles have retraced to test the newly converted resistance into support, as well as this formation here. It already had 1, 2, 3, and 4 tests, and it never came back to test that newly converted resistance into support. Sorry. In this case, you can see that we've retraced and we've used it as support here, rejection, we failed it, and now we came back up, and now we're literally closed right at it. So there is now that I'm looking at that at this chart in the price action from today, and looking at this bottom support, which could be around 15, 16 cents, I can actually see the potential of us coming back down to 15, 16 cents to test our newly converted resistance into support. Literally right here. See, the price is right over here. So you can see that if we came back down in the next day, 15, 16 cents, right around there. Okay, so there's a lot of confluent validations that need to be met, and also the the not 236 is actually at the 16, 17 cent area as well. So we do have some support and confluent supports as well. So now let's move on to the next chart. Okay, so this is the statistical side of the analysis. I did present this in the first day that I charted HLBZ. So we are looking at HLBZ on the 8-hour chart here, and I have performed the back test for a bearish move. So this back test is actually throughout the entire trading history of HLBZ, and these notes are all done by hand for us to evaluate the statistics. Okay, so this is now applying mathematics into this rather than just sentiment. Okay, so we were able to see, based on a volatility versus momentum profile backtest, new viewers, this is volatility represented by this indicator BBWP. It is direction neutral, and we pair it with a stochastic momentum or a momentum-based indicator like an RSI, but in this case I'm using stochastic momentum, which is proprietary to TradingView, and it's suggesting a continuation onto the downside. And just to let you know, I have backtested this indicator alone in several tickers, and I tend to get an average 75 to 90% accuracy in guessing the asset's direction. Okay, so not perfect, but very good to consider. So what I have done here, man, I'm sorry, I don't know why I'm burping up a storm. Okay, so from the iterations that we've actually gone below what I consider to be into high contractive volatility areas, so which is anything below the 15th percentile, within the 15th percentile. So anytime that we have dropped into these contractive levels of critical volatility and started an expansion phase to the upside from that move, I have backtested or taken note of every iteration's duration and also downside pressure. Okay, so now the downside pressure is also combined with how many times the iterations, volatility versus momentum, were guessed correctly to the downside versus not. Okay, so the metrics came back with a very interesting set of results. So out of a total 16 iterations throughout the entire trading history of HLBZ in the 8-hour chart, we're looking at 10 correct iterations, which gives us an average downside accuracy of 62.5% with an average downside pressure of minus 31.45% with an average duration of just over 11 days. Okay, and this is proof of work. So now, the signal fired about a day ago or 2 days ago, and I've taken iteration from that moment. Actually, this was around 2 days ago or 3 days ago. So yeah, we actually took it from here, which is the contractive level. So contraction to expansion, right? So the downside move has flashed. In order for us to apply the metrics, we need both of the what's called the volatility component of BBWP and the moving average both pivoted to the upside. So as soon as we get that pivot, which is to the upside, which was right around here, we actually started to get a downside move. Okay, so now per the indications or per the statistics, we are looking at a downside target of 16 cents. What do you know? So we're looking at 16 cents statistically. We're looking at 16 cents formation-wise, and we're looking at 16 cents technically. So, I mean, where was it? Sorry, it was on this chart here. Which one was it? This one, and also the triangle bottom here, 15, 16 cents. So that 15, 16 cent area is actually very, very loud before what could be a pretty... I consider this to be a very good area of accumulation or a demand zone before us definitely exploding to the upside and then converting our newly converted resistances into valid forms of support before continuing on to that explosive move. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord. Know that I'm not a financial advisor. I can't actually suggest for you to buy or sell any assets. Please take whatever I do show and iterate within these videos as a form of entertainment only. Okay, and but with that said, I wish you well. I wish you a good night. The links will be in the description below for you to consider joining the Discord trading community. Okay, you guys? But yeah, I'll catch you at the bell mañana. Adios.